Good Friday morning, Market Chameleons, and everyone joining us for the first time. Thanks for coming by and checking out the Market Chameleon pre-market show. Is it Friday or Thursday? Thursday morning, right?
Good morning. Well, yeah, Thursday.
Thursday morning.
Yep.
Everyone, before we get started, please take a look at the screen share. The disclaimer, neither Market Chameleon, Dimitri, or myself are registered investment advisors or a broker-dealer. If you need investment help, please search out a broker-dealer and discuss it with them. This show is for informational purposes only, showing the Chameleon tools. With that, D, you want to get started?
Yep. Thanks. So I'm going to share my screen here. And quick note, Will and I, we do these shows in the morning to try to help answer questions you guys may have about the Market Chameleon tools, the data, or the analytics. If you have a question, type it into the live chat on YouTube, and Will's keeping an eye on it. He'll read them back to me. While we're gonna take a couple minutes to allow you some time to put those questions in, and in that period, we're going to take a look at the pre-market report to see if we could get insights, what's going on in pre-market hours, and then we'll move on to the questions. So over here, I am looking at the pre-market report, and from a top of the page here, you see this calendar view, and this allows you to go back in time if you wish to see what happened in a pre-market on a particular historical date. We showed the last week's worth of summary statistics. This just gives you a chance to eyeball what typically happens in the pre-market hours, if there's any trend or something unusual. Today, we are on March 21st, so this last date over here. And so far, we see there are 727 stocks trading higher in the pre-market, 255 stocks that are trading lower. We have 153 million shares trading on up volume, 48.5 million on down volume. And if we convert that to dollar value, we have $5.3 billion worth of stock trading higher, $600 million worth of stock trading lower. So from that perspective, it looks like traders in pre-market are trading with a bullish lean or bullish sentiment. Especially you could just compare that to the previous days, and you could see that that is quite a big imbalance towards the bullish side. Let's look at it from a couple more perspectives. Then we will move on to our questions. I'm going to move down scroll down the page a little bit. And here we have a more granular view of what's going on in the pre-market. There we see now stock symbols with price changes and volume in the pre-market hours, along with market cap and alerts. We have the most active stock list, our biggest percentage gainers and biggest percentage decliners. And there are 177 stocks that made it onto our biggest percentage gainers list, 44 on our biggest decliners. So that also points to a bullish lean in pre-market trading. Now, to make this list, we set certain thresholds for liquidity and volume price changes, because pre-market trading can trade with very low volume or liquidity. But if the stock meets those thresholds, it can make it onto this list, and that includes small cap stocks. We see the market caps over here, ETFs, leverage products, inverse products. So to narrow down to a small group of stocks, we could use our filters. Here, if you save the watch list and you track a particular group of stocks, you can filter this list by your watch list. We're going to use this filter in ETF, for our example. I'm going to click on it, and we get different ETFs to select from. We're going to choose SPY, this one, S&P 500 ETF. And when we do that, the list below gets filtered by stocks that are holdings in the SPY. So the point here is to filter out the S&P 500 companies, S&P 500 companies, and see what's going on for that particular group. And here we see 25 stocks made it onto our biggest percentage gainers list, and 3 on our biggest decliners. So you could see that this indicator also shows that so far the traders in pre-market hours have a bullish lean. They're setting up, on the bullish side of trading. So we gave it a couple minutes. Well, I will take questions now if you have.
Yeah, we had a question from Rob hanging over from yesterday about the pre-market. The next table down, gap ups and gaps downs. He just wanted you to explain that data.
Yeah. Okay. So as we scroll lower on the same page, and thank you for the question, we have another table of statistics for the last 20 days. Okay, so these are movers, that trade in the pre-market hours, either gapped up in the morning or opened up higher in the morning or lower in the morning. And we track those stocks. So before we do, before we go over like this analysis, let's just discuss what the idea is behind this report. And it's the idea behind this analysis is kind of similar to, some of you have even mentioned it, how Markov chains work. So the Markov chains try to look at a certain, a stock that's in a certain state, right? And then if we look at that state, we want to see how does it transition to the next state. So in this particular example, what is the first state, right? The first state is, what did it do at the open? Did it gap up or down? That's what the state is, right? So what we do is we define the state and say, okay, now that we know the state, how does it transition to the next state? So the next state, we define two next states. One is, well, how does it go from the open till 10 a.m., the first half hour of trading, right? So this is our next state. So this is where it's transitioning to, right? So we're at the market open, we gapped up. And now we want to see, okay, if we gapped up, what happened? How did it transition from the open to 10 a.m.? So you could see here, then from the open to 10 a.m., it was down. How did the market open, if it gapped up, how did it transition all the way to the close, from the open to the close? So you could see it gained another 1.3%, right? So over here, that's where it opened. So that's up 2.4% at the open. So that's the state. That's what we first analyzed, right? Okay, now that we know the state it's in, so it's an up gap. Where did it transition from that point? From that point, right? And that's what we're tracking here to see how did this stock transition. So the idea here is, well, let's group them together and see how that group transitions, right? If we could grab statistics and see if there's anything in there that we could find as a pattern or something significant. So this would be similar to a Markov chain where, you define a state and then you see how things transition. And they use that, I think, methodology, like with trying to credit cards, trying to like forecast if somebody's going to not pay their bill on time or something like that. So that's what we're looking at. We collected the last 20 days of data, right? And then we divided them up into two states. One is the gap up, meaning the stocks gapped up in the morning. Then we took them and we looked at the ones that gapped down, right? What about the ones that gapped down? What did they do? So those are the two states: gap up, gap down, right? And then after we defined the states, then we track how did they transition, right? So the transition from the opening to 10 a.m. is there's two transitions, up or down, right? It could either go up or down. So the stock, what are the, we have a state, and then it could transition to up, or it could transition to down, right? Same thing to the close. It could transition to going up, or it could go down, right? That's how we're starting. And if you're developing Markov chains, that's what you would start doing, right? So what do we have here? If we took all the stocks that gapped up, right, in the last 20 days, and then we said, okay, does that state indicate any? Like let's take a look at that. How did those stocks transition? You could see here for that after the opening, what did they do in the first half hour? And what is the idea there? Well, if there's enthusiasm in the pre-market, right? In this example, if there's enthusiasm in the pre-market, right? And traders are bullish, they're willing to enter the pre-market and the opening knowing that it's less liquid, right? They already know it's less liquid. They need to get approved for pre-market trading. So it's not anybody could do it, right? So they're taking on more risk. And if they're in a state of that initial enthusiasm, does it carry over? Does it continue for the first half hour of trading? Right? That's where we're looking. Is there an overwhelming amount? If there's enthusiasm, does it continue to build on it? Do the traders that don't trade in the pre-market and the institutions, is it maybe an indicator of what those trades will do, right? Or not? So that's the idea. How does that first half hour look? So this is an example of that type of analysis, right? So what do we have here? Well, in the last 2 weeks, if we just looked at all our observations, right, what it says is that, yeah, the ones that gapped up, 47% of them continued higher. That in the first half hour trading, they even added to those gains from the open. 52% after the open were lower, right? So they didn't continue to add to gains, meaning that more volume, more traders, saw that as an opportunity to take profits and get out, right? So that's what this data's first pointing to. And if we took then the average of all the returns, right? So we say, okay, well, those are, but the returns aren't always the same, right? So it's not like the ones that were up were all up 1%, and the ones that were down were all down 1%. They're not all the same. Sometimes, well, maybe more of them were down, but we want to know, well, the ones that were up, did they go up by significantly more, right, than the ones that went down? So that's why we have to take the average of all the returns, right? Because let's say the ones that were up, for example, 47% were up, but if on average they gained 5% and 52% of them were down, but on average they only lose 1%, well, you're still going to be net positive going long, right? Even though you might not win as many, but you might still be net positive. So that's when we have to take the average returns and say, okay, well, those are the frequencies of ups or downs, right? Now we got the frequencies, but now we need the magnitudes. So that's the average return there. So here it says that the average return was down 0.2%, 0.2%. So both of those indicators are showing that if you looked at all the gap up moves, and they opened higher at the open, they tended not to hold on to those gains on average, right? More often than not, they were down from that open, and they were on average down to 0.2%. So look, you could slice it and dice it different ways, but this is one example to show how to start analyzing, in this type of analysis, right? You could do it first 5 minutes, you could do it first minute, you could do the VWAP price in the pre-market versus the open, but this is a way of kind of saying, well, here we have this data, right? We have this information, we have intraday data, and how can we start to analyze it to look for, statistical significance or anomalies and so forth. So far, this is what it's shown us. What about, maybe then the next assumption is, okay, maybe that first half hour was not, there was a lot of trading, people are getting out, there were re-hedging positions. What about to the end of the day? Does the drift, the VWAPs, everything, once they kick in, how does that look for those? And here it looks like, equally split. Half, 49% up, 49% down. There's probably unchanged. And on average, they lost 0.1%. So if we looked at all that data, so far it indicates that, yeah, that opening gap mostly, would look like, if we looked at across the board on all the securities, right, that opened up, was used to take profits, right? That initial reaction was an overreaction on average. What if we narrowed down this data though? What if we said, okay, but that's, that includes everything here, right? So there's stocks in there, there are low cap stocks, there are stocks in there, there are ETFs, there are stocks in there that are penny stock, lots of stocks in there. And what if we narrowed down this data and said, well, what if we sliced it and diced it a different way? Right. After all, part of trading's analyzing data, right? That's what you're going to do, research and analyze data. So let's create a different, smaller group subset and see if and then we're going to compare it to, this initial control group, let's say that, that we have our comparison group, and we'll say, okay, let's take a subset of this data, section it off, and see if it makes a difference, right? Is it the same type of distribution or different? So let's say we wanted to compare just S&P 500 companies, because this is everything, right? It doesn't matter what stock. It could be an inverse ETF in there for all we know. There's 2,500 observations in there. So I'm sure there's inverse ETFs in there. I'm sure there's lots of stuff in there, that have a lot. It could be a preferred stock, right? So what if we sectioned off S&P 500 companies? They had to be part of the S&P 500, right? And if we section those off, let's see if that looks different than this one group. So how do we do that? Well, let's use the filters that are available to us. All right. And what we just did one in the pre-market, and we looked at this in the ETF, and we know that if we click down, we get these ETFs to select from. and we could filter it by the holdings in that ETF. So SPY is the S&P 500 ETF, right? So that's one way we could do this. So let's select SPY, and what will it do? That it'll create a similar stat in the last 20 days. For the gap up, it's going to show us. So we already know the initial state, that's gap up. It's going to show us how those transitioned. Okay, that's what we want to see. We want to see how those stocks transition that are members of the S&P 500. And then we're going to compare those two to each other. Okay. So let's select SPY. We're here. When I do that, okay, now boom, now below I have the list of the S&P 500 stocks, right? So I could see all of them in here. All right. And these are the transitions here. So what do we see here? Very similar, right? Percentage of the percentage up versus down, right? Remember, we only have two transitions, up or down. So those are similar. Maybe, on average, though, they were break even by the first half hour. Looks by the end of the day, it was 50-50, and on average, break even. So nothing, extraordinary about that. They look like they really did the same thing as every, all the observations combined. So we could keep going, right? We don't have to stop there. Maybe we have a hunch and say, well, maybe biotechs are different. What if we wanted to see biotech industries, because those are the ones that, might be reacting to some news and maybe short covering, or what about those? Or tech stocks, right? So we could keep analyzing this further, because what are we doing here? As traders, we're data analysts, and we're looking for certain statistical edges or anomalies in the data. So let's do that. So I'm going to unfilter this. Instead of using, we could do the biotech ETF. Let's do that first. So I'm going to do the biotech ETF. Click on that. So now we have 109 biotechs. Well, here, we start to see a bigger difference from this expected, right? So now we have this expected category, right? And we're comparing it as well. We're expecting the groups to be like, this big group. That's our comparison, right? So something similar, we want to see is something, or is it statistically significantly different, right? So, you could run it through your own, if you guys do data analysis, you'll be able to run those z-tests, t-tests to see, like, my expectation is it's always 50-50, right? It doesn't matter. So it's this statistically different, but we're comparing it to this, and we're eyeballing it for now, like, before we want to get deeper into the analysis. And here, well, that looks a little bit, starting to look, quite different. That all of a sudden, well, what's going on with the biotechs? Why are they not, why are they looking so much different than the rest of them? Because here it looks like almost, 39% of the stocks continued higher, but 61% were lower from the morning. On average, they lost 0.8% for the first half hour. So maybe that enthusiasm in these illiquid biotech stock, maybe they're less liquid, and that enthusiasm is overdone. People are reaching, and looks like, whatever enthusiasm is built in, the specialist probably steps in the morning to sell. That might look like, on the high end range, right? In the morning, it tends to sell off 61% of the time, right? Sells off for an average loss of 0.8%. So you could see here that's 4 times greater than the 0.2 versus 0.8. Sells off significantly, and even by the end of the day, it gets even worse. Right? The amount of stocks that add to gains are only 36%. 63% are lower for an average loss of 0.6%. Right? So this looks like it's in the biotech space. It's not, doesn't look too good. But we could take a look, and we could even get the high low ranges. Let's just see, because this could be risky. On the high end, we see 12%, on the low end, 18%. So now we're grouping these stocks, keep in mind, and looking for certain statistical anomalies. And again, one thing here is I do kind of see some stocks repeating in here, right? I think here, I'm going to sort it. So ALT repeats in here, APG. But it keep in mind, this is a report to get some general sense before you go deeper into those analytics. Okay, so this is a one example of report to say, okay, if I'm just looking for general information of what happens. What about the text? What about technology stocks, right? What if we did technology stocks? You know what? Let's do this. What if our hunch was, what about technology stocks that are low cap? Right? So let's do technology. Right? So now I got all these technology stocks, but what about the low cap ones? Maybe the ones that really get put, easy to push, lower float. Let's do those. So I'm going to take the market cap and say, well, what about technology stocks that are low cap? Maybe my assumption is, well, those are easier to follow through. You don't have as much flow. Maybe you don't have as many, institutions VWAPing. Maybe it's it could more retail investors. I don't know, talking about in Reddit. Let's see what's going on there. So what's the low cap? I mean, let's do under 1 billion. Okay, let's just do those under $1 billion. So here, they're actually even worse, right? Because now what we have is, well, at least by 10 a.m., 35% of them continue higher, 64% are lower for an average loss of 1.7%. So those are even worse. So maybe there, what is the data telling us? That, those traders, that are bidding it up and pre-market at the open, there's tends to be no follow through once regular trading hours opens and more liquidity comes in. So Will, I'm right up at the end, but I just wanted to kind of explain this report and the idea behind it.
Yeah, that was super helpful, D. Great job. Thanks for the question, Rob. Thanks for joining us, Market Chameleons. It was a great show. Awesome job, D.
All right. Thanks, everyone, for joining. Stay safe out there and have a great trading day. Hope to see you guys tomorrow.
Trade in peace, Chameleons.